Hello, ladies and gentlemen, and a warm welcome to today's webinar where we're looking at the CFO Insight, the dividends of collaboration between finance and procurement. So I extend to you a very warm welcome indeed. My name is Susie West, and I'm the founder and CEO at sharedserviceslink.com. We are a business community serving the finance and accounting shared services market, and we currently have about in excess of 7,000 members globally, and increasing significantly every month. If you would like to become a member, it is free, so just join up afterwards by going to our website and becoming a member. I'm very pleased that today's webinar is being sponsored by Ariba, and we have speaking with us today James Tucker, who's the Global Director, Solutions Marketing Ariba Network and Finance Solutions at Ariba. And alongside him, we have presenting today Sam Knox, who's Senior Vice President, Director of Research at the CFO Magazine. So very pleased to be having them joining me today. So let's have a look at the agenda for the next 60 minutes. First of all, I'm going to be touching briefly on the importance of questions, and then looking a little bit at the context of why exactly we are having this webinar today. And then I'm going to be passing over to both James and to Sam, who are really going to be drilling into some fascinating information which you can make a lot of notes on and take back with you and use to drive through change within your organization. We'll then be taking questions in the last 10 minutes of the session. In terms of questions, please do send me your question nice and early, and I'll put it to both of our speakers. Make sure you use this opportunity. This is your chance to get the answers you are seeking to your very specific questions. You can see that there's a box that's marked out with a red line. That's where you need to submit your question to me, and I'll be taking those and putting those to the speakers in the last 10 minutes of the webinar. So do make sure that you stay on certainly for the last 10 minutes to get those questions answered. Let's have a look at why we're actually having this webinar today. So some of you may know at sharedserviceslink.com we insist on talking about the relations between procurement and finance. So we put up a lot of attention onto this specific area. And the reason is, or the reasons are, I should say, are the following. First of all, it's not necessarily natural for the finance function, the procurement function to gel. They're not the easiest of bedfellows, and in the past they've had very different agendas and aims and objectives and goals. And they are perceived, in the past, they've been perceived as very different functions within an organization. But nearly everybody within shared services is now awakening to the fact that if we can join these two functions, then the results of the purchase-to-pay operation can be really incredibly compelling, not just for the purchase-to-pay process, but for the wider business and the good of the wider business. So, as a business community, as sharedservicelink.com being a business community, we feel duty-bound to share best practices on how these two functions can elegantly align and do much greater things in collaboration rather than working independently of each other. So I'm very excited to be introducing this webinar today, because what we're doing here is we're looking in particular, this is the first webinar where the results from a very interesting survey which was run by the CFO Magazine, which is entitled Reaching New Heights. And we're very pleased that this is the first webinar where these results are being illustrated and talked through. So, and the aim of this is really so that you can, at the end of this webinar, you can really use the information to make sure that your collaboration between finance and procurement really is as optimum as it can be. So with all that in mind, I'd now like to introduce James Tucker from Ariba. Over to you, please, James.
Great, thank you, Susie. And I'm actually going to introduce our first speaker this morning, Sam Knox. Ariba has worked with Sam and the CFO team on several studies over the past few years. In 2007, CFO and Ariba examined the working relationship between finance and procurement, and since then we've done several other projects together, including the one that Sam will brief you on this morning. And then in the weeks ahead, we're going to have another study on the networked economy and the impact of new technology, including how social media is helping companies build stronger relationships with their customers, their suppliers, and their trading partners. For more than 20 years, Sam has researched and written about corporate finance, about business strategy and information technology. He's a frequent speaker and a group facilitator on corporate finance and other topics of interest to C-level executives. And for the last 8 years, he's led CFO Publishing's research business and serves on the company's executive committee. So welcome, Sam, and we look forward to hearing about the research here on reaching new heights.
Well, all right, James and Susie, thank you very much for that introduction, and hello to all of you in the audience. Again, my name is Sam Knox, and I'm here to brief you on some very interesting and exciting research that we have conducted in collaboration with our longtime research partner, Ariba. And today, I'm pleased to roll out the top-line findings from a research study that we recently completed, all of which is written up in our research report, Reaching New Heights, the Dividends of Collaboration Between Finance and Procurement. Now, in this study, we conducted a survey and then a series of interviews with senior finance executives around the world. And in total, we captured more than 260 voices on the relationship between finance and procurement, its current state, companies' aspirations for improving it, at companies in North America, Europe, and the Far East. All the respondents, everybody who participated in the study, came from a company with $100 million or more in annual revenue, and respondents come from across the full spectrum of industries in the global economy. Now, a lot of the work in this study is an update to some work that we did in 2007, and I'm going to refer to that in several instances. So we've got some sense of how things have changed over the last several years. Speaking of change, and before we get started with the top-line findings, Susie, I want to turn back to you very briefly and ask to conduct a quick polling question that will set the context for much of what we're going to talk about in the rest of the presentation. So, Susie, over to you.
Thank you very much, Sam. So on your screen now, ladies and gentlemen, you can see a question with a couple of options there for you to tick one of, please. So from 2007 to 2012, has your company focused more on improving the performance of your area in finance or procurement, or has it focused more on driving costs out of your area of finance or procurement? We've only got 34% of you voting. Please, as you well know, we like to get these numbers up to about 70%. So if you haven't ticked a box, it is an either or. So which one of those has really drawn the majority of your focus as an organization is concerned? So from 2007 to 2012, has your company focused more on improving the performance in your area or driving costs out of your area? 75% of you have voted. Let's have a look at the results coming up on the screen. Very, very short indeed. So it's quite tight as a result. As you can see, we've got 53% coming in on the second option, driving costs out of the area of either finance or procurement, and 47% coming in on the area of improving the performance within either finance or procurement. Interesting results. Back to you, please, Sam.
Well, all right then. So it looks like we've got a fairly even split with perhaps a slight bias here toward driving cost out of finance or procurement. And I think that is certainly in line with a good bit of what we've seen in the research. Over the last several years, we have seen, according to the survey that we have just completed, we have seen what we can best describe here as a sense of progressive improvement. Progressive improvement in a broad array of the various different levels of performance in important procurement-oriented activities. As you can see in the slide on the screen, the bright orange bars represent 2012 values. The 2007 values are in the lighter orange bars at the bottom. And what do we see? We see an 11 percentage point increase from 15% to 26% in the percentage of respondents who say that their procurement organizations achieve excellent performance in managing relationships with current vendors. Similarly, we've got a 10% increase in the proportion of people achieving excellent performance in their negotiation with current or prospective vendors. Complying with government regulations, again, fairly strong values here. What's somewhat noteworthy, however, is that respondents are still less likely to see very strong performance in the highest value and cross-disciplinary interdepartmental activities like risk management, planning, budgeting, and forecasting, and decision support. So on one hand, we've seen a real improvement in the proportion of people saying that their procurement organizations have achieved excellent performance in a lot of the core activities. Nonetheless, some of these items at the bottom of the list here that we're going to get into in a few minutes, some of them really are lagging behind. Again, business planning and forecasting, ad hoc decision support, and risk analysis. Now, in addition, we have seen that finance executives say that their procurement organizations have become more strategically oriented. We asked the fairly straightforward question, is your procurement organization more or less strategically oriented, strategically minded, and thinking about the contribution that procurement makes to the organization beyond its most rudimentary execution of transaction-oriented purchasing activities. And we have 3 out of 4 respondents saying, yes, indeed, our procurement organization is more strategically minded. Okay? I think that that's an important distinction. First of all, we're seeing some persistent improvement, especially in the core dimensions of what the procurement organization is charged with. And then second of all, a change in mindset toward a more strategic orientation. Now, the other big change that I want to mention before we move on is this notion of organizational structure. We've seen a gradual movement away from decentralization and a step toward centralizing procurement organizations at the enterprise level and, to a lesser extent, at the business unit level. And now, in 2012, we see that fully 52% of companies have centralized their procurement organizations at the enterprise level, and another quarter of respondents have them centralized at the business unit level. Decentralization really has waned. One of the interviewees, that is executives we spoke to in the interview program, says, historically, procurement in our company was decentralized, but recently we've centralized it, and as a result, we have certainly become more efficient. Other sources echo this sentiment, and they're saying that they achieve an improvement both in efficiency and in the capture of information that is especially useful throughout the larger context of business planning and forecasting, risk management, and other high-value activities. Now, this progression from 2007 to 2012 has taken place during a period of dramatic disruption in the global economy, all of which points to a new and a shared agenda. That's how we're describing it in the report. It's a new agenda and a shared agenda between the finance organization and the procurement organization. Now, the disruption is very complex, and it varies certainly from market to market and from company to company. But boiling it down to its most elementary factors, we certainly have the global financial crisis, which affected capital markets and more or less everyone who borrows, everyone who buys, and everybody who sells, and that affects, in essence, every single company. Second of all, many natural disasters, several of them. Are they more commonplace? That's a question for another conversation, perhaps. But the fact is, we've had a combination of tsunamis, earthquakes, oil rig disasters, plus geopolitical unrest in North Africa and the Middle East, all of which have driven commodity price volatility, supply chain disruption, and a growing sense of, on some level, a growing sense of unease about the global economy. The shared agenda that I referred to, I think, is best characterized as, first of all, a continued mandate to reduce costs, to drive cost out of cost of goods sold without compromising risk. and without compromising risk management. Okay, so a clear mandate to drive cost out of the business and to manage risk more effectively amid this greater sense of commodity price volatility. Second of all, an effort to improve payment terms. That doesn't necessarily mean extend out payment terms, but rather to optimize payment terms to meet the business requirements of the various lines of business. And then finally, a mandate to improve profitability, largely in the context of a slow growth environment for many, many industries. Given that so many industries are growing slowly and that top-line growth is so elusive, additional value and additional improvement in EPS, which is ultimately passed on to shareholders in appreciated stock prices, additional improvement is going to come increasingly from improvements in profitability rather than from blockbuster growth. So with all this in mind, let's turn our attention now to the opportunities that lie ahead for procurement. The opportunities that lie ahead for procurement and how finance and procurement organizations can and should alter their operations and their strategies in the years ahead. Now, again, to set the context for this piece of our conversation today, Susie, let's do one other quick polling question. Over to you.
Perfect. Thank you very much indeed, Sam. So on your screen now, ladies and gentlemen, over the next 2 years, should your procurement group focus more on core capabilities, such as cost savings, vendor relations, discounts, and administrative efficiency, or contribute more to decisions regarding working capital management, risk analysis, planning, budgeting, and forecasting? So it's either or as an option. We have about 33% of you voting. So if you haven't already cast your vote, please do so. As you well know, the more of you that respond, the more meaningful of the data. So over the next 2 years, should your procurement group focus more on core capabilities, such as savings, cost savings, vendor relations, discounts, or decisions regarding things like working capital management, risk analysis, planning, budgeting, and forecasting? So if you haven't voted, please do so now, and closing the poll in 3, 2, 1. 73% of you voted. It's actually 75. Thank you very much for participating in that. And coming up on your screen now, you can see the results. So we have 64% of you saying that procurement group really should be focusing more on the core capabilities, and 36% of you saying that the procurement group should focus more on decisions regarding working capital management, risk analysis, etc. Interesting results there. Back to you, please, Sam.
All right, then. So what we see here is, I think, roughly speaking, it's a 2-to-1 split, and that is you in the audience are calling for a focus on improving core capabilities in the procurement organization, and only a little over a third are calling for an expanded role for this higher value contribution from the procurement organization. Interestingly, this ties in quite closely with exactly what we heard in the rest of the study. Okay, we hear consistently and persistently, and perhaps even stridently, from finance executives, a call for finance and procurement to first master and perfect their primary mandate. Master and perfect their primary mandate, and from there move on to newer heights, to an expanded role in which companies are, in which procurement organizations are contributing to higher value activities. But first, they really need to continue to improve their performance in the core functionality and the core activities of the procurement organization. And we've got some detail on that beginning right here. First of all, we asked, where do you see greatest opportunity to improve the core activities of your procurement organization? And as you can see on the slide, we've got 73% of finance respondents saying their companies have great opportunity, still have great opportunity to find opportunities for cost savings. Similarly, 64% of respondents say there's great opportunity to strengthen their relationship with suppliers. 57% coming in saying working with suppliers to enhance product offerings represents a great opportunity at their company. Okay, so there very clearly is, on one hand, as we saw earlier, there's been some real improvement. On the other hand, there still is a great deal of work to be done to find opportunities to drive costs out of the business, to acquire inputs, raw materials, intermediate goods, utilities, and so on at a lower cost, right? And to strengthen the relationship that companies have with suppliers and to work with suppliers to enhance product offerings. These are the areas where finance executives say the procurement organization needs to continue to provide additional value and take advantage of these great opportunities. All right. So further mastery of the fundamental role on one hand, and we'll get on to this expanded role in a moment. The question is, of course, how do you actually go about achieving this? And in a separate question, we asked about how do companies, what are the steps that companies should take? What are the improvements that procurement should make to improve their contribution to company success? And we see that finance executives call for improved process efficiency, improved collaboration with their supplier network, much better capture of discounts and rebates with their suppliers, and a better deployment of automation in the procurement process. Okay? Now, in this question, people were invited to select 4 particular options. Okay? Of the list that we've got here, what are the top 4? And so we've shown the 4 that reach the highest value here. What do they all have in common? Well, they're all focused on the core elements that we just talked about, right? All focused on the core elements of finding opportunities for cost savings, closer relationships with suppliers, and enhancing the relationship with suppliers to improve product offerings themselves, okay? All of which are tied to process, technology, and relationships with vendors. Okay, so finance executives say focus on the core and do so through the combination of technology, relationships, and process efficiency. All right then. However, it's also very clear in another question that these changes alone are not all that respondents seek. Okay? We asked about where do you see the greatest room for improvement in your procurement's delivery of value to your organization. And what do we see? Well, the top 3 values here are all tied to an expanded role. An expanded role for the procurement organization in which it contributes more substantively to risk analysis, to business planning and forecasting, and to cash flow and working capital management, decisions, and oversight. Okay, so on one hand, finance executives are saying, really need to focus on the core, most fundamental activities of the procurement organization, on one hand, right? On the other hand, the long-term objective and the place where there is greatest room for improvement is in these high-value activities of risk analysis and risk management, contributing more to planning, budgeting, and forecasting, and managing working capital and contributing to the oversight and management of cash flow and other working capital metrics. Now, this whole theme ties into what we identify as a fairly clear realization that procurement is not just about cost cutting. Now, that's not our realization. That is clearly the realization among senior finance executives who participated in the study. Okay? That is a growing realization among finance executives that procurement is a group to be maximized, not minimized. It is not just a matter of getting the combination of inputs at the lowest possible price. It is not a commodity acquisition machine, but rather it can, at its highest and best performance, it can in fact be a real source of strategic value. However, to become that source of strategic value, finance executives call for a more analytically oriented, information-intensive procurement function. They say that they seek a procurement organization, and they want their procurement organizations to have a better understanding of lines of business, business requirements, the impact of procurement decisions on their company's financial condition, financial health, and financial performance. And they want their organizations, their procurement organizations, to be a more reliable source of good ideas for improving business performance. Now, when we pose this question directly, we get a fairly neutral, or perhaps uneven endorsement of the capabilities of procurement organizations. On one hand, we've got 44% saying that yes, they agree that procurement is frequently a source of good ideas for improving business performance, but fully 32% are neutral on the matter, and 24% actually disagree with the statement. Now, I don't think we should infer that this is somehow an insult to procurement, but rather a statement of uneven capabilities among procurement organizations, and perhaps a realization that there really is a gap between what procurement is able to do, not so much based on its capabilities, but rather based on its structure and the information that it has at its fingertips, and its mandate. Okay, so it's not so much that procurement isn't good, but rather that as currently configured with the information it has available and with the mandate that it has, it is still unable in many instances to deliver the good ideas for improving business performance. Now, what would happen if the procurement organization was in fact highly analytical and had these very robust problem-solving skills? In other words, if companies were in fact able to close this gap by building a procurement organization that was more analytical, had better problem-solving skills, and was able to step up to these high-value procurement and finance-oriented collaborations and activities, what would happen? Well, when we looked at the data from the survey and segmented respondents into two groups, those who have excellent analytical and problem-solving skills, and then all other respondents, we see a very stark distinction between the companies that have excellent analytical and problem-solving skills in procurement and everybody else. Those with excellent analytical skills are consistently better at negotiating with current and prospective vendors, at managing relationships with their current vendors, at complying with regulations, audit and control of procurement and inventory, understanding their payables exposure, and so forth, all down the line. In other words, a highly analytical, business-oriented, problem-solving focused procurement organization is consistently able to deliver better performance. Let me wrap up with this before I hand back to James Tucker from Ariba. As one respondent writes in the survey, he says that procurement needs to apply its expertise to strategic decisions, not just to tactical decisions. In one of the interviews, a CFO said this. He said, procurement needs to look past the best price and move toward limiting our working capital investment in inventory, even if that means paying slightly higher prices for smaller lots. The smarter procurement is, he says, the smarter procurement is, the more it understands about the business, then the more it can help organizations make the high-value decisions that we're counting on it to make. So with all this in mind, it's a great pleasure now for me to hand off to James Tucker at Ariba and ask about your thoughts on this research and Ariba's offerings. James, over to you.
Oh, thanks, Sam. And it is fantastic stuff, and I think Ariba's been leading in the spend management space now since the late 90s, and we do see the importance of a shift for procurement and finance to partner in new ways and drive greater value. And to that end, Ariba's shifted its strategy over the last several years to from spend management to collaborative business commerce. And so now what we're focusing on is helping companies not only improve the way that they buy, but improve the way they also sell and the way they manage cash. And a significant part of our strategy is to help companies discover, connect, and then collaborate with their trading partners globally using the Ariba network. And it ties in nicely with this McKinsey study, which shows how enterprises, what they call networked enterprises, are seeing tremendous benefit when they connect their employees and their back office systems to their customers, suppliers, and trading partners. In fact, these networked enterprises are found to be 50% more likely to have increased sales, higher margins, and market share. So as Sam has shown in his study, there are significant internal challenges to getting to that point. There's still more work to be done in terms of improving the core capabilities before many folks are ready to move on to that next level. Consider, if you will, the objectives of sourcing. They're challenged with identifying the best suppliers across complex spend categories. Procurement then must negotiate terms with the suppliers and in many cases may need to concede payment duration in order to get a price reduction. And then payables is then forced to try to make payments on time across all of these suppliers. Then the business unit owners are often asked by their suppliers through their relationships for a favor, maybe to get an invoice paid. So you have these kinds of internal collaboration challenges, and each of these stakeholders then must deal with their respective contacts at each supplier. Imagine the complexity of this when you consider these collaboration challenges spread across all of your suppliers with all of the stakeholders involved in that process. And then when you consider all of your suppliers that have similar levels of collaboration challenges with each and every one of their customers as well, you can begin to see how these inefficiencies can really impact the entire industries. So most organizations have done some level of automation with much of their internal business functions, with ERP, your SAP systems, your Oracle systems. And they may, with some of their suppliers, be offering a supplier portal, which provides some level of connectivity outside of the four walls, but quite limited. And in fact, most of the automation outside the four walls of these organizations has only been with a small percentage of suppliers, as this chart intends to show. You may have a few suppliers that you're doing EDI, probably with direct material suppliers. You may have some suppliers that you're doing a PO flip with into invoices for some indirect spend. But with today's challenges in being required to find new ways to drive cost out of all categories of spend, whether it's direct, indirect, MRO, complex goods and services, organizations now want to move sort of beyond that, those small percentages, and are looking today to be targeting 80% of their trading partners and 80% of their spend for automation. And companies, whether they're in manufacturing or in the service sector, are achieving this kind of success. But it's taken hard work, and it's taken a focus on the right things and the kind of collaboration, Sam, that you're seeing and we're citing from your research. So after sort of studying the characteristics of these companies that I've seen that are leading the way in this sort of networked economy, I've kind of come up with what I think are five characteristics that are consistent across these networked enterprises. So I'll take kind of a David Letterman approach to this, and I'll start with number 5 and work my way up to number 1. So the number 5, I think, is cost reduction, and Sam, you did cite cost reduction as probably the top opportunity for improving core activities with finance and procurement. If you consider the level of automation that I talked about on the previous slide, you can see that there's still a tremendous amount of opportunity for driving cost out of the business when other spend categories get automated outside of some of the few that have been automated already. Number 4, I think supply chain risk is really one of the next opportunities and things that I think companies that have seen this and seen the opportunity for mitigating that risk. I think of a conversation I had recently with one of our customers who said they were mitigating supply chain risk by identifying a contingent supplier for a Japanese supplier that they had for a part. And what the story was that they found a Chinese supplier as an alternative, and when the tsunami hit in Japan recently, they had to turn to that Chinese supplier for the same part. The irony, I suppose, is that Chinese supplier, it turns out, was getting that same part from the same Japanese supplier. So visibility into your supply chain and greater understanding of some of the risk inherent in your supply chain is a characteristic of success. Those companies that figure out how to do that well will succeed. Number 3 I have is compliance. I see companies looking at compliance in a broad spectrum. It could be complying with contracts and purchase orders. It could be complying with vendor and price and prices. It could be complying with payment terms, and in Europe and in South America, we also see complying with VAT and regulatory regulations. So the number 2 I have is process efficiency. I like to use scanning as a good example. I think over the last decade we've seen a lot of effort for investment in scanning and workflow solutions, and this has certainly driven some efficiency. But in addition to efficiency, the Hackett Group, as an example, talks a lot about efficiency and effectiveness. And I think effectiveness I would liken to the errors and exceptions in invoice processing. We know that, as an example, upwards of 30% of invoices have some kind of error or exception, and when you've simply scanned an invoice in order to get it into workflow faster, you still have an ineffective process because you're having to deal with each and every one of those errors and exceptions. So it may be efficient that it's in an electronic form and easier to pass around the organization for for resolution, but there's still an ineffective notion to that due to the cost. At $20 per resolution, at a minimum, for every 100,000 invoices now, you're looking at about $600,000 of cost for every 100,000 invoices for reconciling those errors and exceptions. So I think process efficiency is important, but measuring effectiveness would be the other component to that. And then the number 1 factor I see across these companies is supplier enablement. It's one of the often underestimated and perhaps overlooked stakeholders in any successful collaborative initiative with finance and procurement is the supplier. And well, what does it take to target and onboard and train and support these suppliers? All of the companies that I know that have successfully become networked enterprises have figured this one out and are doing a really good job with it. So I was fortunate to attend Ariba Live in Las Vegas a couple of weeks ago and able to hear some of the incredible stories from companies like Flint Hills Resources and GlaxoSmithKline, UPS, the Dollar Store, and many, many more. And supplier enablement was clearly one of the top success factors that these companies talked about. So let me quickly share some of the profiles. One of the great success stories shared at Ariba Live was from a leading oil refining and pipeline company. They needed a solution to connect their MRO suppliers to streamline invoice processing, reduce costs, enforce PO and contract orders. And they implemented the Ariba network and our PO and invoice automation solutions, and within the first year, they've exceeded their e-invoicing volume targets by 75%. they've enabled 2 times more the targeted number of suppliers in the first year, and they're realizing almost 99% touchless processing. And what this means is that their invoices are validated at the point that the supplier submits the invoice. So all of that cost that I sort of referred to before around errors and exceptions is not having to be borne by their or taken on by their AP department. These errors and exceptions are caught at the point the suppliers submit it because of business rules that are embedded in our network. And apparently, prior to the Ariba solution, the buyers within this particular organization were spending about 2 hours a day tracking down these exceptions. 2 hours a day. So you can imagine what they're able to do in terms of some strategic value add and rising to that next level, as Sam talked about, with that freed up time. Another fantastic story of a company sharing their success of becoming a networked enterprise is a world-class pharmaceutical. And their financial shared service center was struggling with huge paper transaction volumes. And they found that they had essentially maxed out what they were able to do with EDI. So they selected the Ariba network to connect with their long-tail suppliers for PO and invoice automation. They've enrolled about 2,000 suppliers the very first year that they started with Ariba. And they have found that the solution is much more flexible and cost-effective for their suppliers than what they were doing with EDI. So their suppliers also found that Ariba's trademarked PO flip technology to be extremely helpful in terms of reducing their time and cost of processing invoices or submitting invoices. And now, interestingly, those same suppliers now or additional suppliers are requesting this company to be sending more purchase orders in terms of improving collaboration between those buying and selling organizations. And the bottom line really is that this has reduced their costs significantly, and about 30% reduction they're seeing in their inbound supplier inquiries, again, freeing up time to focus on more strategic things like early payment discounts, like supply chain finance and initiatives like that. So for those of you less familiar with Ariba, let me wrap up with a brief overview of our network and finance management solutions. Ariba's been and remains one of the largest global business commerce networks of its kind. We have nearly 1 million trading partners transacting over 80 million purchase orders and invoices and about $300 billion of spend annually. The Ariba network connects buying organizations with all of their suppliers through a mix of services and technologies that meet the requirements of suppliers across all volumes, geographic locations, and technical sophistication. And likewise, our solution will also connect selling organizations with all of their customers. The Ariba Commerce Cloud consists of a mix of technology, community, and capabilities. The technology features the Ariba network, and it's a growing community of buyers and sellers, and as you see along the bottom there, also a growing partner ecosystem. And these partners provide value-add services in the network, like integration, like trade financing, F&A outsourcing, VAT compliance, and the like. We also offer services that are really going to be required for you to effectively assess your opportunity, to get you going quickly, and then provide continuous support, benchmarking, and performance measurement that you're going to need to have continuous performance improvement. And I do want to touch upon benchmarking and performance measurement to wrap up here. It's very important for initiatives like this that you have the right goals and that you measure the right things. As Lawrence Peter, a famed Canadian academic and author of the Peter Principle, wrote, if you don't know where you're going, you'll probably end up somewhere else. And I found these 4 organizing principles for performance measurement to be a very helpful tool, and I believe that they address the strategic areas of importance for both procurement and for finance. The 4 categories each include several key performance indicators and benchmarks. I don't have those listed here, I'll give you my email address, and I can send you some more information on what the various key performance indicators are from research that I've done with the Hackett Group, with PayStream, with CFO Research, and others. But these 4 organizing principles, I'll just touch upon them quickly. Process as an example, this could be things like invoice receipt to approve. How long does it take you to do that? And that becomes very important in terms of on-time payment, discount capture, and things like that. Discounts could be things that are measuring your discount, your percentage of spend that's discountable, the percentage of discounts that you're actually achieving. We know that most companies are only achieving maybe about 50% of the discounts that are available to them. So there's significant opportunity for bottom line savings with a focused and disciplined discount program. Compliance, I talked about that a bit. This could be addressing things like contract compliance and PO compliance. Accenture and the Hackett Group have done independent studies on this and have found that by closing up the leaks in your contracts, you can save anywhere from $7 to $9 million for every $1 billion of spend under contract. And working capital is really measuring days of payable, of receivable, and of inventory. And by improving working capital just one day in any of these categories is nearly $3 million in impact for every day of improvement on your payable, your receivable, or your inventory. So combined, those become the 4 organizing principles of benchmarking and performance measurement for finance and procurement, and I think are a really good place to start when you're looking at measuring how you're performing against your peers. So there are other webinars that we've done that where we can provide you some of those benchmarks and some of the data to assess where you're at. So in summary, Sam spoke about better alignment between finance and procurement, and how when there is better alignment, that this can lead to not only improving how things are, the operations that you're doing today, but setting up opportunities for then strategic advantage. That leading enterprises are doing an excellent job with supplier negotiation and vendor management. We've seen a dramatic improvement in 2012 versus where the state of that in 2007. The greatest opportunities for companies that are cited from this research report are in cost saving, in supplier relations, and working capital impact. And I mentioned the networked enterprise, the McKinsey study that shows that companies that do connect their internal systems to their customers, their suppliers and trading partners, are 50% more likely to have increased sales, higher profit margins, and gain market share. And that ultimately supplier value, if you can demonstrate that stakeholder is going to then participate in these programs, and you will have ultimate success with your external collaboration with these guys, and getting their value, getting value for your supplier will create success for you, and that's kind of the gift that keeps on giving. So a lot of material to cover here, and I mentioned Ariba Live and the various stories that we were able to hear while at that event. I've listed a couple of them here. Ariba has each of the sessions recorded at Ariba Live, and you can go to slideshare.net/Ariba and actually listen to some of the audio and sift through the slides of these great presentations and hear stories from these companies themselves. We've also posted a link in the chat section of the console here of where you can get a copy of Sam's white paper and his research. If you go to ariba.com/resource library, under the white papers category, you'll find Reaching New Heights, and you can get yourself a copy of Sam's research from there. I'm also blogging frequently on the subject of payables performance measurement and best practices in payables automation and receivables automation and working capital optimization. So you can join in on those conversations on LinkedIn or on Twitter. And with that, Susie, I will turn things over to you.
Thank you very much indeed, James, and Sam as well. We've got a lot of questions coming through, so if you do want your question answered, do send that through to me now. First question, I think I'll put through to you, please, Sam. How do we convince CFOs to invest in a source-to-pay project to deliver savings in line with a category management stroke price savings agenda? What are your kind of thoughts on getting a CFO to buy into those kinds of investments? Hello, do we have Sam on the line?
Forgive me, I had hit mute.
That's okay. I hope you had a question.
I certainly did. And
Good.
the answer to the question on how do you get the finance organization and ultimately the CFO to sign off on such an investment, I think is severalfold. First of all, it is like any investment, you need to demonstrate business benefit and do so in a way that is analytically sound and not theoretical or speculative. Okay, so on one hand, it's a matter of demonstrating. It's a matter of demonstrating how the investment is in fact going to deliver immediate near-term cost savings. In some other research that we have conducted in other projects, we identified the time horizon for IT investments. Now this is going to vary from company to company, and it's going to vary vary by time. Okay, but nonetheless, we found that CFOs and CIOs are looking at IT investments and approving them when they have a payback on the order of 18 months. Anything that's going to take longer than that to deliver value and to demonstrate a positive return on that investment is going to be a tough sell. Okay, so that's the first thing. Demonstrate business benefit and do so in a reasonably near-term time horizon on the order of 18 months. Now, the second thing is to think expansively and to consider the fact of not just the return on that actual investment, but other or perhaps less quantifiable business benefits that will accrue from such an investment. Okay, so first of all, demonstrate it using standard ROI analysis and calculation, of course, doing everything you can to come in with a positive return in the near term, and then second of all, think expansively about the qualitative benefits that are going to accrue from this investment.
Okay, good, thank you. Regarding the actual survey, you were saying that 263 CFOs were involved in giving you responses. Were they mainly private sector, or did you have a good representation from government, public sector?
The vast majority are, of course, from the private sector. The public sector has able to look that up very quickly, and as I do so, perhaps we can move on to the next question.
Okay, that's fine. Also, I do have another question, which is directed at you, please, Sam. So talking about procurement, obviously, throughout the course of this webinar, could you just specify what kind of type of procurement are you talking about? Is it largely the indirect spend, or is it direct spend, or is it supply chain type of procurement?
We examined this from a very expansive point of view. And so we're talking about the procurement organization. We did not, in this study, drill down on direct spending versus indirect spending.
Okay.
Okay. In some of our prior work, we have, and I'd be pleased to share some of that with a reader who's interested in it. Since your last question, I've now looked up, and then 6% of the response base in this most recent study, 6%. Come from the public sector.
Thank you very much for that very specific response there. Question for you, please, James. So there's the observation from one of our attendees that there's a little bit of a sluggish pickup of support for e-invoicing in Europe. In your opinion, James, where do you think the drive for e-invoicing in Europe is coming from?
Well, it's coming in two parts. It's coming, one, from legislation in individual countries and across the EU that are, in some cases, mandating it. It's also coming from finance and procurement executives, as Sam's research indicates, of companies that are looking for that next wave of savings opportunity for and cost reduction in those disciplines. And so, we're seeing the EU directives on e-invoicing, and that, I think, associated with that in Europe in particular, there's, with VAT tax and audit concerns, I think some companies may have had a fear, I guess, that e-invoicing would not be legal. And I think that it's important that companies understand that it is. Legal invoicing is alive and well and quite successful. I know that we are deemed legal and compliant in 36 countries. And we have our requirement satisfaction for VAT and audit for e-invoicing has been, the rules have been written by KPMG, signed off by KPMG. We partner with TrustWeaver for digital authentication. We provide the country-by-country archival capabilities, so all the different attributes of legal and compliance for VAT purposes are addressed, and there are unique characteristics on a country-by-country basis. We have documentation for each of those that shows that how we can accomplish that. So I think that's probably held it up in Europe. That's why I think that North America is further along in terms of e-invoicing. But it is starting to take off. It's one of the fastest growing document types for electronic commerce. And I think we'll see, as the EU directives unfold over the next several years, that it will actually explode in terms of usage.
Thank you very much, James. So only a couple of minutes to go, and we still have a number of questions to get through. This is a question for you, please, Sam. To what extent do you find CPOs in the management team? And can you relate the presence of a CPO within the management team to the success rate of an organization and their results?
When you say in the management team, can we use the idea of who the CPO reports to, right? Let's use that as a proxy, okay? When we queried people in this most recent study, we said, who does your procurement, the head of your procurement organization, so that's going to be your chief procurement officer, who does he or she report to? In 38% of cases, he or she reports to the finance organization, and particularly the CFO. In 32% of the cases, the head of procurement, the CPO, reports to the CEO or the chief operating officer. Okay, so it's one of those two in 70% of cases. Now, we looked at the data and segmented it according to these reporting relationships. Interestingly, we didn't find an especially tight link. We didn't find an especially tight link between any of the reporting relationships, that is, between reporting to finance or reporting to the CEO or the chief operating officer. We didn't find a really important difference that wasn't explained by industry. Okay, so here's what we found. We found that, generally speaking, procurement is more likely in manufacturing to report to CEOs or COOs, and they have certainly different behavior and different attributes. They're more concerned with cost control, but it's less a matter of who they report to and much more closely tied to the particular industry itself.
Thank you very much for that. I'm afraid we are now out of time. So Sam Knox and James Tucker, thank you very much indeed for that very insightful webinar. We still have many, many more questions for you both, but I'm afraid James and Sam, I'm sure, will be following up with you independently after the webinar. So thank you very much, ladies and gentlemen, for your time and attention. As James did mention, if you'd like a copy of the report, it's yours to have. Your soft copy is available at ariba.com/resource library, and you can find the report there. We will be sending the link through as a follow-up email after this. Also, we've got a couple of webinars coming up in May. Please make sure that you're available for those. And I'm very pleased to say that Ariba is